It's late in the week, you've just closed another red trade and you're wondering, staring at your screen, if this trading thing is ever going to work for you. If it hits close to home, you're not alone. I've spent literally over 5 years doing everything right and still bleeding money. What finally changed wasn't just another indicator or a secret strategy. It was the way I started perceiving risk versus payoff. And once that clicked, it completely changed my trading results. In this video, I will break down the exact framework that took me from inconsistent and frustrated trader to consistently profitable trader. And I will also share 2 double-digit trades that I took in real time and I share with my community. If you've been working hard but getting nowhere, this might be just the missing part. So let's have a look, guys. We've just taken another trade, guys, and this seems to be starting off pretty well. Just this morning, we've managed to close a 12x trade, which was a very good surprise for Tuesday. But considering what's going on with the tariff situation with the United States and the geopolitical situation, it kind of makes sense, even on a Tuesday. And this is where we took the trade. I didn't expect such a fast reaction, as you can see here. So far, it's going well. And this morning, we took another trade, and this trade was 12x return trade. So this was a DAX trade. So this was the London Open, and it was less than 2 hour long trade. So if we come back to the beginning of this, you can see that's where we entered in a trade, in a short trade, and from here, the rest is history, basically. The trade went straight down, and a little, actually over 1 hour, we closed this trade for 12x's in total return, as you can see here. The reality, guys, is that both of those trades were taken in the middle of the range. So if this was my demand zone here and this was my supply zone, the trade was taken in between those two zones. And in reality, these are probably the best places to take long or short trades, depending on which part of this mid-range you're taking the trade. We have specific rules. Usually taking a trade which is around the center of this mid-range is actually a good place, just above the center line to take a short trade, and below the center line to take a long trade. Just be very mindful, because usually some of the best long trades are based just here under the zone, and some of the best short trades are based here above this demand zone. So there needs to be made a clear distinction, and both of those trades were taken in between, just under this place, which is great for a long trade. So we short it in both occasions, and this gave us extremely high returns. The other reality, guys, that I'm actually looking at is the fact that price is never moving in a straight line. As you can see, I just shared in the beginning of this video the opening of these trades. Currently we are running very close to a double-digit returning trade, so we are around 1 to 9 risk to reward ratio at this time. And what you can see here is that the price actually did multiple retests of the entry, and what usually traders are doing there, taking the stop loss just under their entry point. So in this particular case, I'm not sure, usually traders are trying to move to maybe 1-to-1 or break even, but no matter what the case is, you would have been stopped out in both occasions, because here the price went straight to the entry. Here, if let's say our stop loss was just under the entry, we would also have been stopped out. So here again, coming back to the drawing board, I can't emphasize strongly enough how important it is once you're in a trade. Let's say we took this short trade here. This is our stop loss right here. I can't emphasize how important it is if, let's say, this is a high probability trade, you're using a day trading system that finds those high probability trades. And then what most traders are doing, that would be to move the stop loss to break even, or maybe even under breaking even point. So they are kind of locking certain amounts in case the price reverts. And what happened here is the price went sharply lower, and of course it's going to reverse, and of course it's going to take these guys, and of course it will take these guys as well, who move their stop loss to the breaking even point. So in reality, what is the purpose of risking, let's say, 1x and be able to make less than 1x in a matter of, I don't know, half an hour, 1 hour, because the price will always retest these levels, guys. So if you are certain and you have a very high conviction in your trade, just leave your stop losses as they are. But then for this to materialize over the long term and to give you consistently sustainable edge, you need to have a very precise entry mechanism. This is something that I talked about in here. So once you combine those two, you actually have a working system that will increase your odds of being successful in trading. So moving your stop loss is one of the biggest mistakes traders are making, and I'm emphasizing it almost in every other video I'm making. But please do not move your stop losses, guys. As you can see in this trade I'm still running at the moment, I would have been stopped out if I did that. So this is a perfect example of why you shouldn't be moving your stop losses. And if trading feels like a constant effort with very little payoff, I hope this video was able to help you to overcome this obstacle. But if you still have any questions, challenges, I'm more than happy to jump on a call with you guys. Just answer your questions in the comment section below. I'll see you in the next video. Bye.